What does the chart suggest in terms of the intact nature of the bull market?
Well, the point about seasonality is that we powered through the weak spot that typically appears in early January. That was a sign that the market was really strong. The market has fallen into a little soft spot, which is perfectly normal in late February to early March. That soft spot is just about to end, the end of this week. March 5th was one of the dates, not only from the seasonal pattern, but from some other technical work that we do. And so we're looking for a turning point right about now-ish. Could be yesterday, could be today. We're in the process of getting through that, but then late March and all the way through April should be seasonally strong.
You say the rise may be interrupted for a bottom due March 19 to 26. What happens toward the end of the month?
That's a little ripple in the liquidity stream that some of our indicators detect. It's a unique process that just shows when little turning points are due. We're not sure exactly what the context of that is, since it doesn't show up in the seasonal pattern. But we do know that we're seeing gobs of breath all year long. We're seeing small caps leading in terms of relative strength. If you look at a relative strength ratio of the Russell 2000 versus 1000, it's rising. So that means small caps are outperforming on a relative basis. And that's a generally bullish thing. You can only get small cap outperformance when liquidity is plentiful. And so when you see small cap outperformance, that's a sign that liquidity is there, and it usually tends to stick around for a while.
So, Tom, I'm bull market anniversary, 10 years. You say it continues until 2021, struggles for 3 years, and then we get a big downturn in 2024. How do you get these kind of specific dates and years? What exactly are you looking at?
Well, that's a fun little crystal ball that I discovered several years ago. What I found in looking at long-term charts of crude oil prices is that the movements we see in crude oil prices tend to show up about 10 years later in the movements of the stock market. And so 2014 was when we saw that big drop in crude oil prices. And so 10 years later, that says 2024 is when the next drop should be for the stock market. I can't think of a real good reason for why exactly crude oil knows 10 years in advance what the stock market is going to do, but it's only been working since 1896. And so at some point when you've seen enough data, you accept it, even if you cannot explain it.
Tom, we can't always get you to comment on individual stocks, but you have done some chart work on GE. What is it telling you?
Well, everybody who watches your show knows that GE's been beaten down. You never want to buy a stock that's in a downtrend unless you have a really, really good reason. Like it's really, really oversold, or there's some news that's going to develop that nobody knows about and you can jump in ahead of that news, or you can catch a bounce. Right now, there's not a really, really good reason to buy GE. It failed to get up to its declining tops line. It couldn't even get back up to that line. And now, with the news that came out yesterday, it's broken the rising bottoms line that developed off of the December low. That's not good. You got a failure to break out when you had a chance. You got a break down below the line, so targets to go back and retest the lows. And right now, it's not cheap, it's not oversold, and there's no good reason to buy it. There's 3,000 other stocks on the NYSE. There's 3,200 on the NASDAQ that you can look at that find a better opportunity.
All right, so you're not there yet. Just one more on the big picture bull market question, Tom. Did you expect this to last this long? Did you predict that?
Well, we expected an upturn off of the December low. What we've been gratified to see is just how strong the breadth numbers have been, the advanced decline statistics, the difference between the numbers of stocks going up versus down. And that's led the cumulative advanced decline line to already break out to a higher high ahead of prices, and that's very bullish. It says that liquidity is strong. When you get liquidity being strong, it's not just a temporary thing. It tends to be a persistent condition. It lasts for a while. You can have a bull market and the indices continue with poor liquidity if you channel that poor liquidity into just the right stocks. But when you have the broad list going up, when you have the small caps going up, it says that liquidity is so strong, regardless of what the source may be. You may not have a good explanation for why the wind is blowing so strongly, but when you see the wind stock standing up, then you know the wind is strong and that it's likely to stay strong for a while. So the other thing to know about is we're in the third year of a presidential term right now, and third years are nearly always up years. part of that is because in the first 2 years, a new president especially will try to get everything fixed so that then he can spend the final 2 years declaring victory and running for re-election. So the bad news tends to dry up in the third year, and people get more optimistic and they push stock prices up. We're seeing that right on schedule. We're seeing seasonality back to working again on schedule, and we're seeing stock prices follow the leading indication from crude oil higher just like they're supposed to. So everything's working like it should, and that's a nice thing.